You were listening to Charting Wealth's comprehensive review and forecast for the week beginning Monday, the 4th of June, 2018. We see stocks are up for the day, bonds and gold are down, and of course our book, Charting Your Way to Wealth. Thank you to everyone who's ordered the book so far. We are autographing the first 10,000, and there's still a few of those left, so please go ahead and order your book. If you look at the top right-hand corner of your screen, there is a link to the video that we put together, tells you all about the book. It explains our two main methods of trading. It goes over everything you need to know to get started in the method that we trade in. It's very concise. It is limited as far as the pages go to just the stuff you need to know. You're not going to have to sit there and read for days and try to dig out little bits of wisdom. It's all right there for you. So please follow the links there. And you can also go to the website, chartingwealth.com, or our YouTube channel. There are links there also to how you can buy it online. We do pay all of your taxes and the shipping. So there's just one price for it. We will get it right out to you with a nice personal note I put to every book, and I'll autograph your book for you. God bless, my friends. We thank you so much for your support because it does help us. This is not cheap to do every day, and we've been doing it every day for years for you. So let's jump into these markets. Now, I am traveling today. I'm in a relative's house. I have dogs around me, and I pray I get through this before someone knocks on the door and they go crazy. So let's jump in. We see the S&P 500 up 1% for the day, but how did that affect the week? We have a red spinning top, almost a doji. We do have a weekly vertical crossover. We saw it before. In fact, if we look at the derivative oscillator, it flipped over the prior week, and it was enough movement that indeed the price percent oscillator flipped over this week. So we do have a weekly vertical crossover. We'll be sending out the text messaging to everyone, but if you're listening, of course, you don't need the text message because you know there was a weekly vertical crossover. What does that mean? It means on Monday morning after idiot hour around 10:30 when the market settles down, check either your 30-minute or 4-hour chart and see if indeed those are green candles and the market is looking good. If so, go ahead and do a virtual purchase of, 1,000 shares, whatever it is you want to practice with, and let's see how that works for you. But again, check the markets around 10:30, or if you're just going to use the 4-hour chart, check at noon. If you've got a green up candle, considering getting in on a virtual trade. Now again, this is the worst time of year to try to trade. Sell in May and go away is an old market adage because there's a lot of volume out of the market. Things get skittish and weird in the summertime. A lot of sideways sliding and the market goes to and fro quickly. It's not like the fall-winter trading zone, but practice through the tough summertime trading zone to hone your skills, and it'll get so much easier in the fall. So we do have that weekly vertical crossover. Let's check out what's going on the 2-day chart. We saw that this is a green candle. It was a prior red candle ending on Wednesday the 30th. The latest 2-day candle is a green up candle. And again, it's got a bit of a wick on the bottom too. It's more like a big green spinning top, which again means some indecision but tending up. Derivative oscillators continuing to lose momentum. And the price percent oscillator, however, is moving up. Let's look at that 4-hour chart, see what we see. Of course, it crossed over in the afternoon going up, which is a good sign. Up in the morning and the afternoon, but the price percent oscillator crossed over in the afternoon, and it crossed over at the same time with the derivative oscillator, another good sign. So keep your eye on the S&P on Monday morning. Now let's go on to the Qs. We had a weekly vertical crossover last week, and we see so far the week after a green up candle, no wick on the bottom, a nice box with a wick on top. Open box green candle, which is what we like to see. Actually, the 5th week of up movement, finally enough power over the course of that prior week to cross things over. We see the derivative oscillator gaining energy, price percent oscillator heading up nicely. 2-day chart, we saw this latest 2-day candle bump up. The derivative oscillator had been losing energy, gained a little bit, price percent oscillator going up, green open box candle wick on top. And again, nice to see that kind of price movement, price above the 2-day trend line. We look at the 4-hour chart. Of course, it crossed over going up. It had sort of bounced around a little bit, but it crossed over going up back on the morning of the 31st, Thursday, and of course continued on up since then. We had a jumping in point there earlier in the week, and we've just well, actually at that time, we've seen things continuing to move up nicely since then. We had some difficulty finding entry points, if you will recall, when the week first started out because we had 2 down candles. But then things turned around and crossed over, so we'll continue to keep an eye on the cues and see how long that trade plays its way out. Remember the magic, the beauty of the weekly vertical crossovers. There's got to be enough energy there to really push things on. Now, let's look at TLT. What do we see going on there? Let's head to the weekly chart. It crossed over going up, same time that the cues did. Of course, one of the weaknesses was the derivative oscillator was still in the negative. That flipped over the course of the last week. We have a nice big green up candle for the week. That's our Heikin Ashi candlestick. Derivative oscillator heading up nicely also. We go from the weekly to the 2-day. And of course, we saw a nice 2-day candle on the 30th, that 2 days ending then on Wednesday. This latest is not a solid red down candle, but it is a red open box candle. Big wick on top, little wick on the bottom. Price movement still above the 2-day trend line. Derivative oscillator heading up and the price percent oscillator heading up. We look at the 4-hour chart, and of course, we've watched this over the last few days as we had a nice big bump up in the afternoon on the 29th, Tuesday, and then starting off on Wednesday, things started off slowly building, and then of course a down morning. Bit of a reprieve in the afternoon. Price movement is of course still above the 2-day trend line, but we're concerned about a crossover going down on that 4-hour chart. So keep your eye on that very closely, and we'll just continue to watch and see. Don't like seeing the derivative oscillator flip over to the negative. So maybe we'll see things bump up off, could actually bump up off the 200 period moving average line. It looks like it might have given a little bit of a floor there. So we'll see. We'll continue to keep our eye on things on TLT as the week gets started and see how long that weekly vertical crossover will run. Okay, lastly, as we always do, my friends, we go to gold. What is going on with gold? Down 0.48%. Now, gold is in a confirmed move on the weekly and the 2-day. Derivative oscillator continuing to gain downward momentum. Price percent oscillator headed down. The last week, however, was an up week, but again, price movement still below the weekly trend line, and we have a nice, strong downward trend line. We look at that 2-day chart, and of course, it's been sort of bumping off maybe a bottom around 122.30 or so, and it did, however, the derivative oscillators continuing to lose downward momentum, but the price percent oscillator kinked over, heading down more, ended the week with a 2-day candle. The prior had been a doji. The latest is pretty much a doji. A spinning top, again, means less indecision than the prior candle. Still indecision tending down. Price movement is below that weekly trend line. And as we look at the 4-hour chart, what do we see? We've been waiting for this 4-hour chart to cross over going down. It did right at the end of the day. So what do you do come Monday morning? Check things out either after idiot hour around 10:30 or at noon and see if indeed this play is continuing, and you can look to jump in and ride gold down. Why? Because the 2-day and the weekly are both in confirmed down moves. Folks, that's where we are as we end the week and go into this first full week of June. Again, please help us out. Purchase our book. We so appreciate everyone who has. We'll autograph those for you, put a personal note in, get it right out to you. And again, best deal out there, and you get to buy it from us. So all the money goes to continue to support our channel. And you have questions, problems, concerns, let us hear from you. cw@chartingwealth.com. Look under the daily reviews. If you're a subscriber, you'll see a link to how to purchase the book there. You can also find it at chartingwealth.com. There's even a link at our YouTube channel. So again, follow us on YouTube, Twitter, Instagram. We appreciate it. Be sure to subscribe to our YouTube channel also. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.